Welcome back. Now at 75.9, the Northwest University Business School's Policy Uncertainty Index for the second quarter is still well above the 50 neutral mark, but it has eased from a record high of 78.6 previously. A variety of global and local factors have driven the slight improvement during the period, but the global outlook still remains highly uncertain. Raymond Parsons from the Northwest University's Business School joins us with greater perspective on the data. Raymond, thanks so much for your time this afternoon. And as I mentioned, uncertainty really remaining the name of the game. We are, however, seeing an ease in policy uncertainty. And perhaps walk me through some of the dynamics that have boosted sentiment. I can imagine that the passing of the budget as well as improved relations between the US and SA also helping.
Yes, good afternoon to you. I think just to now create a bit of a perspective, as you rightly say, we hit a record high in the Policy Uncertainty Index in the first quarter, primarily due to the global developments from the United States, the shock of the first announcements about the Trump tariffs, and then secondly, the uncertainty at that stage around the finality of the South African budget, for the first time being faced with a budget that would have to be postponed, and as we know, went into a third version. So I think the important background there is that there's been some easing from those elevated shocks in the second quarter. So once again, there were some positive factors. For example, that the rate of inflation has come well within the Reserve Bank's target range. Interest rates and borrowing costs are indeed coming down, and also that we're likely to get off the grey list in the next few months if we play our cards well. So there have been some rather positive developments, which unfortunately have been outweighed or have not prevailed over some of the negative factors. So we're still in highly negative territory as far as policy uncertainty is concerned, both from an external and an internal point of view. Indeed, one might say, if you're a business decision maker, well, is this the new normal or is it the new abnormal? And I think that those are the dynamics which our economy and which the business community have to deal with.
And I can imagine with the level of policy uncertainty also has, a negative impact on business confidence as well as just the investment coming into the country.
Well, that's, I think, what our track record has said about all the measurements about policy uncertainty is that it's simply bad for investment and growth. And that's been a very important phenomena that we've seen over the past few years and seen in the past few months. If you have highly elevated levels of policy uncertainty, if the business community doesn't know quite where they stand, what you find are two things: that they hesitate on some of their investment decisions. We've had a report today from a leading banker of the extent to which the cash balances of corporates are very high because they really want investment opportunities in which to invest, and they need to know where they stand, not today, but tomorrow and the day after tomorrow. So what we've had in the past few months, unfortunately, is that our economic recovery has been very uneven and slow, that the high-frequency data has been mixed, that 0.1% GDP growth in the first quarter was also disappointing. And what you've subsequently had is that virtually everyone's growth forecasts for this year have been trimmed. For example, that the Reserve Bank and the Treasury have also reduced theirs. So we're now looking at a growth rate probably of about 1% this year, which we know is simply not good enough. And where we want to reduce the policy uncertainty factor to the extent that it contributes to that weak outlook.
And looking ahead then, Raymond, are you starting to price in the impact the Middle East tensions will have on policy certainty going into the third quarter? Now, while tensions seem to have de-escalated, we saw what happened with the oil price, and that, of course, likely to filter through to fuel price hikes, perhaps.
Well, I think there are some positive factors, as you have indicated that the inflation outlook is much better. And to the extent that that makes it possible for interest rates to come down over the next few months, that option is certainly on the table and is a strong possibility. But it's the negative issues that have been dominated, which is why the policy index is still indeed in its negative territory. And the two most important issues, I think, here are firstly, that there needs to become a strong message that those reforms to which we are committed are going to be implemented rapidly and indeed quickly, and also to the extent that lagging in investment is undermining growth, we want to see, as the phrase has it, South Africa being turned on an infrastructural basis into one big construction site symbolically. Because once that perception takes hold and you are able to send a message that there will be more jobs, will be more growth, will be more investment, that's where we need to be. And we need to understand that our economy does not have the momentum at the moment it needs, and that we need to give it a strong push into the future so that we can unlock the true potential that we have in order to deliver on what we have promised in terms, for example, of the GNU, a 3% GDP growth in the medium term. We need to work a lot harder in order to make that a reality.
And quickly, before I let you go, just on the GNU, how much of risk are you filtering through there, considering that, you know, now and again there are these jitters that come about? And when we talk about economic reforms, we also just need to see a cohesive plan from government. But then what happens, you know, when they are not agreeing on certain things?
I think what is important and what came through very clearly with the formation of the GNU was this was good for investment, good for growth, to see a degree of political stability. Now, of course, last week when we had this upheaval about the appointment or the dismissal of a deputy minister, you found that the markets hardly moved. Why? Because they say they accept that there will be tensions.
Okay.
But clearly, they are watching the situation very carefully. And what ultimately business and investors want, they're not involved in party politics, but what they want is a stable political and policy environment that enables them, within a climate of reasonable certainty, to take key investment decisions. It's those key investment decisions that we need to see taking place so that we can do better and not settle for a 1% growth rate this year.
All right, let's leave it there. Thanks so much for your time and just unpacking that index for us. That was Raymond Parsons from the Northwest University's Business School.